Welcome back to another Trade Alts technical analysis tutorial. This is risk management number 3, where we're going to be going over position management, specifically how I like to manage my positions. Give you a little bit of insight to that, and I think judging by the conversations that I'm seeing in Discord and recent price action, I think this is a very appropriate time to insert this into the series. So with that being said, let's get to the video. As usual, this is the disclaimer. Please pause the video and read it in its entirety. All content is for entertainment and educational purposes only. Nothing is financial advice. All right, so the first thing that I want to discuss that I think is very important when it comes to managing trades. So I'm going to do the best that I can to explain kind of, again, what I do and how I manage my positions. But the first and foremost, like the first thing you really want to understand is the current trend that you're trading. And I'm sure a lot of you have heard this phrase, the trend is your friend until the end. Well, it's true. The trend is very important. Now, there's going to be different trends on different time frames. I'm going to save that for, I'm going to make sure to do a video coming very soon on trend, because I think that definitely deserves its own video to kind of break that down. But is it bearish? Is it bullish? Or is it sideways? The dreaded sideways that likes to wreck a ton of traders. So again, is your trend, is it bearish, bullish, or sideways? The position that you're opening, right? Because this is like, so video 3 in the risk management series, we spent the first 2 videos really going over the criteria that you need to enter a trade, right? There's 4 things that you need to enter a trade. We already went over that in video 1. Video 2, we talked about position sizing, making sure that we're appropriately sized. That way we're not setting up potential devastating trades that's going to absolutely destroy our account. And then this video is going to be about, again, managing those trades, right? This is going to be like the introduction to basically managing your positions. So anyway, trend is very important. Are you trading with the trend or against it? That's the first question that you should be asking yourself. So again, are you trading with the trend or against it? We're going to do a little bit more of an example here shortly. And then what is the higher time frame trend? Higher time frame, I think it depends what market you're trading. Now again, this you could ask 10 different traders and get 10 different answers, like what their opinion on high time frame trend is. You have scalpers that, like to them an hourly is a high time frame, right? So it really depends on the type of person, like who you're speaking to. But for myself, like what I consider to be a high time frame trend, it depends on the market, but just speaking specifically about crypto, because I know that's what most people are interested in, I consider anything that's daily and above to be a higher time frame. Okay, so for myself, when I'm asking myself what is a higher time frame trend, I'm really asking myself what's the trend on the daily time frame or the weekly time frame, right? So it's like anything above daily, to me, that's high time frame. So midterm time frame, right? So like a middle time frame, basically in between your low and your high. That for me is anything, I would say, that's 4-hour and above. So like 4-hour to 12-hour, for example, is like a good. So like for those of you who follow me, you know that I like Ichimoku. I use that quite a bit on the 4-hour, sometimes 6-hour and 8-hour and 12-hour. So basically anything in between there, I consider to be like a midterm time frame, right? And then low term time frame, for me, that's anything really below 4-hour. Specifically, again, like if I'm scalping, that could be a 5-minute, right? So I'm literally could be looking at trend on a 5-minute time frame, or an hourly or something like that. But again, that's kind of like what I consider to be like how I define low term time frames and high term time frames. Essentially, like those are kind of the periods that I'm looking at. So I'm gonna go, before I go any further into this video, I think it's important to kind of show you on a chart like what I mean by the trend. Okay, so before I get any deeper, so let's go look at the charts. All right, so here we are, Bitcoin USD on a daily time frame, right? I'm not going to do technical analysis. This is going to be very simple and straightforward, hopefully. So just looking at this, so really since November 10th, right? November 9th, where we kind of put in our high here at 69K. What is the trend since then? Right, so you look at the trend that has developed since then. Well, I don't think it's going to take you very long to figure out that we're in a bearish trend, right? Prices moved down substantially, and we're still currently sitting really around these lows, right? Again, you have a series of lower highs and lower lows. With the exception here, you built in a little bit. So this is kind of like on a daily time frame. You do see structure start to change, puts in a low, a high, higher low, higher high technically, right? Takes it, but then this is your reversal point. Ultimately, like continuing the overall trend to the downside. But so again, looking at this right away, you can say, okay, like the trend has been down, and we just broke out of like a very substantial formation here that took us to new lows, right? Which, by the way, we haven't seen these lows in a very, very, very long time. Let me mute my computer. So again, we haven't seen these lows in a very long time. So again, just telling you that overall it's bearish, right? So if I'm looking at this chart, that's the first thing that I want to make sure that I understand. So higher time frames for me is bearish to the downside. So when I'm looking at managing my trades that I'm going to get into, I want to understand and I want to have a clear understanding again, like what the overall trend is telling me, because like I said in that slide, the trend is your friend until the end. If you're looking to fade this overall trend, if you look, and you have to ask yourself this, right? If you've longed, basically, if you took a counter trend trade, for the most part, I would say you're probably, again, like there's opportunities on different time frames, but like if you're trading, if you're trying to get into like a swing trade, for example, and you're looking to hold that position for, let's just say, a few weeks or a month or whatever. If you're long, how have you done? Like, how have you really done since November? I would argue probably not very good, right? Depending on where you got in. Now, obviously, trading here, you know, price moved up. Like you could have had, there were definitely some long setups here, especially on lower time frames. But the point is, overall, look at where price was and look at where price is now, and you can see the trend again very much to the downside. So taking counter trend trades is a little bit dangerous in my opinion. And I think that, now again, this trend is very much going to end at some point, but do you know when that point is? That's kind of the thing that you should ask yourself, right? And in this entire time, since November, I would argue that if you had traded with the trend, you probably have quite a few more wins on your side than if you're trying to catch a falling knife and just try to long every single, which people do this. And you'll see this on Twitter nonstop. People will say, price is never going to go below here again, I'm all in. And then they'll keep saying the same thing over and over again. Then you get this bounce, everybody gets excited, and things roll over again, and then it's like you start that process all over again. It's very simple. Trade with the trend, and for the most part, I think you're going to have a much easier time overall. But this is kind of the point. This is on a day time frame. I could change this to a 5-minute, and it's going to look a lot different. So like, for example, here, right, you have pretty good structure. You just price is just kind of grinding higher. Now, obviously, you want to do your own technical analysis, come up with your levels, come up with your confluences before you enter any kind of trade. But I would just say we had to move down, right? You see a nice range, sideways consolidation got put in here. But on lower term time frames, like this looks rather constructive at the moment, right? So like this looks like if you're scalping position, for example, it's like if you've traded anywhere from basically, you know, here to here, like you'd be looking more for long continuation until you start to lose some supports, right? But again, it depends what time frame that you're looking at for you to establish like what the trend is. So that's very important. So you kind of have to understand what kind of trader that you are, what kind of trade that you're entering, and understand your time frames. Okay, so that you know kind of like which time frames you should be looking at, you should be comparing to. But again, zooming out, one very easy thing that I like to do is just put Ichimoku on. Again, if you've been following me, you know that I love Ichimoku because it keeps me like very quickly. I can look at this right away and say the overall trend is bearish. Cloud's bearish, price is well below cloud. Obviously, you have bearish TK cross. Like I can go on and on and on. Like this is bearish. It takes me 2 seconds to figure this out. The last time, so like this, what Ichimoku tells you, again, this is, I don't want to get too far outside of the video. The last time that you really should be looking for longs, according to Ichimoku, is here. This is the last time where you're like, okay, like we're getting this pullback, but like, you know, we're coming into what could end up being support. Now, obviously this didn't hold, but the last time price was above cloud was here about 58K. We're nowhere near that. Price has never been above cloud since then. So what does that tell you? That you should really not be looking for long positions. Now, again, if you're waiting for the trend to change, right, and this is a trending indicator here, this tells you what the trend is very clearly. This is telling you that you should not really be looking for longs, period, on this time frame. Now, again, if you went to a 5 minute, right, let's go to 15 minute or something. Again, it's going to look a little bit different. Now, price is above cloud. Like, you get the point. Like, if you're trading this, it's going to be different because it's a lower time frame. But the overall higher time frame is telling you this is not only bearish, but it's been bearish for a long time. And had you just been taking shorts the entire time, for the most part, again, like risk management, obviously very important. But overall, if it biases to the downside and you're trading with the trend, I would argue you probably were more successful overall than trying to knife catch every single bounce that you get, right? Or every single little, you know, pit stop here. People get very bullish, calling a bottom, and then we roll over again. It just, the process repeats itself over and over again until ultimately this does bottom. Trend will reverse at some point in the future, and then it's like that's the point where you want to get on board and really like step on the gas. Okay, so okay, it's enough of that. Let's get back to the video. So now that we have a little better understanding of trend, right? And again, I'm going to do a video specifically on that, talk about market structure, that type of stuff, and you know, I think give you a little bit more insight there. But so when you're managing your position, some variables, and I say some, this isn't every variable that you want to consider, but these to me are really important. So number one, trend. What's the trend? Question mark. Like, what is it, right? Am I trading with the trend or am I trading against the trend? And I want to make it very clear right now, you can certainly trade against the trend. There's going to be plenty of trade setups that come your way that are going to come against the trend, but how you manage those, I think, can make a big difference as far as your overall portfolio and how much you make when you're trading, essentially. So trend, very important. I'm going to say over and over again, okay? Number two, what's the probability of that particular trade setup playing out? So again, going back to risk management video 1, we talked about the 4 things that you need to enter a setup. How are you going to get your trade setup, right? How do you derive your trade setup? Well, through technical analysis, through finding your levels, finding areas of confluences. So again, what's the probability of the trade setup playing out over time? So again, if you're a newer trader, this is something that you're going to be building, hopefully, but you're going to be, and again, hopefully you're keeping track of your trades, but over time you'll establish enough trades under your belt where you can come up with probably, essentially you're going to have statistics on your side to tell you whether or not these trades have been working out to begin with, right? And you should be able to answer it roughly, like, again, what is the probability of this trade setup playing out? Like, you should have statistics backing that up. You should be able to see very clearly over time, like, again, these same types of trade setups that you're taking over and over again. Again, like, how confident do you feel? Like, what is the hit rate been on this particular trade setup you're taking? And then number 3, conviction. And this is something that I don't speak about it too often. I think we're at the point where we start talking about stuff like this. If you've been in VIP, like, you've heard me talk about this a bit before. Now, conviction it's really, again, like, like, conviction to me can mean a number of things, but it's really like, for example, if I have a really high conviction on a trade, and it's one of those trades where all the stars are aligning, right? I have 4 or 5 different confluences at this level that's been phenomenal support. I'm looking to take a long here, and I have trend on my side, something like that, like, to where it's just, it hits all the check boxes, and you're saying to yourself, like, I have been waiting for this, like, to take this trade. So, like, you have really high conviction that this trade is going to play out, right? So conviction is very important to think about, like, before you're entering every single trade. Like, what's your conviction level for this? Now, it should obviously tie into the previous 2 points, which is why it's last. But one thing that you don't want to confuse yourself with too, and I see this on Twitter a lot, like I see this with other traders, is that they'll literally have a 50-50 setup. They will have a coin flip, but for some reason their conviction is like super high. Now they can do whatever they want, but it's interesting to me how like people have a coin flip trade, or worse. Sometimes it's worse. Like the risk reward will be really poor. And or like, you know, again, like to me, I look at this and I don't like think that that setup's that great to begin with, right? But like their conviction will be super high. And again, everybody's gonna look at things differently. Everybody's gonna have their own trade setups and they're gonna manage their trades accordingly, right? But like you have to figure out for yourself as a trader. Again, like conviction, don't confuse conviction with gambling too. Or like if you feel yourself saying, you know, like this is a great trade. This looks pretty good, but I really need to take this because I need to get a win. Because I've had 3 losses in a row. That's not conviction. That's hope. That's hopium, right? So like conviction is like conviction is about like having like feeling confident that you're happy with your trade setup, like, and feeling confident that this trade setup is going to play out because you have the statistics to back it up, you have the setup to back it up, you have the risk management to back it up. And again, like ideally this is probably a trade that you've taken 20 times before, and let's say maybe 16 out of 20 times it came like that, and it was a winning trade. So like conviction, last thing I'm going to say about it, why is it important to begin with and why am I talking about it? Because conviction is going to directly tie into how you manage your position, which I'm going to talk about on the next slide. So like, how do you actually manage the position once it's open? How do you establish, so like your take profits, you should already have those levels, but how much are you taking off, right? So depending on the level, depending on the trend, are you trading with or against? Depending on the probability, what do the statistics say that you've been keeping track of or you're going to keep track of, hopefully? And then finally, what's your conviction? How do you like, what do you think is going to happen with this trade? So I'm going to give you an example. I'm going to try to keep this relatively short because I have a feeling I'm going to be talking. I have a feeling I'm going to be doing a few more videos on this particular topic because I think it's very important. So position with high time frame trend. Okay, this is just an example, but this is about how I manage my trades. Okay, so like I have people, you know, we go over this stuff in live streams quite often. I've said this a bunch of times, but again, I feel like it's really important to reiterate and reinforce with everybody, especially who's in Discord, like who's in the VIP Discord. So again, like position with high time frame, I'm just going to use this as an example. So for example, pretend that the high time frame trend is bullish, like we're bullish overall. It doesn't really matter, to be honest, but again, we're going to pretend that it's bullish. If I take a position that's on the same side as the high time frame trend, so let's say that I identified a trade on lower time frames, and you know, maybe I'm using an hourly time frame, and I say, you know what, this trade looks pretty good on the hourly, good setup, 3 points of confluence here, you know, it's checking the boxes, and I'm going to enter this trade because I have my target, I have my entry, I have my invalidation, and I'm good to go. So I enter the trade. If it's on the same side as a higher time frame trade, to me, it has a higher probability of playing out overall, doesn't it? Like as I kind of explained, I kind of showed when we went over to the chart. So again, if I was taking, which it wouldn't be bullish in this case, it would be bearish because price has been moving down since November. But again, this is just a hypothetical example. But if I'm trading with the trend, more often than not, especially as the trend becomes more mature and it's like you can clearly define it as a bearish or bullish trend. If you're positioned on the same side as that trend, so for myself, typically I give more leeway with my positions because I have the higher time frame trend backing my trade, essentially, which to me that's very powerful over time. Now, does that work out every time? No, it doesn't work out every time. But a lot of times when you get into position, so I'll give you an example. Now, for those of you, again, who have been following me closely, you know that I'm still in this trade. Now, again, whenever you're watching this video, I'm probably going to be out of it by then. I don't, who knows? Like, again, if you're watching this video 6 months from when I posted it, so obviously I might not be in that position anymore. But one of the recent trades that I took on lower time frame was my short from 42,500. So for those of you who are going to be watching this right away, again, like I'm probably going to release this to the public at some point, but for those of you who are going to watch this, as soon as I post this, you'll understand where I'm coming from very quickly. That short that I entered at 42,500 was off of a scalp trade that ended up becoming a swing position. So why did I feel more comfortable letting that trade play out the way that I did? It's very simple, because the high time frame trend was very clearly bearish. So I have trend on my side. So this is a perfect example of, and by the way, again, Bitcoin's at like 30K right now. So that's been sitting in really nice profit, obviously. But I give these positions more room because I have the higher time frame trend on my side. Okay. So I'm going to talk to you a little bit about how I manage my trades. So first of all, again, if I'm on the same size trend, I typically give it more leeway. I might move my stop loss to entry once the take profit is hit. So once take profit 1 is hit, I'm the vast majority of my trades, I have at least 2 take profits. And it depends on what type of trade. So if I'm scalping, I'll typically have 2 to 3. If I'm in a swing trade and I'm envisioning myself being in this trade for potentially weeks or maybe even months, then I might have more take profit levels, and just take smaller chunks out as I'm hitting these take profits, right? Or like if I'm taking a trade based off Ichimoku, I might manage it even a little bit differently than here, because I might just literally use the indicator itself for me to enter and exit my full position. There's a different way, but for the most part, this is how I manage it. So anyway, once take profit 1 is hit, and if I'm on the same side as a high time frame trend, typically my take profit 1 is smaller than not. So ballpark figure, usually 15 to 25% of my position I will take off at take profit 1. Most of the time, especially if prices move far enough away from my entry, and I feel like if price comes back to that entry that is probably going to go against me significantly, right? That's usually a good time for me to move. Like I will move my stop loss to entry at that point and make it a risk-free trade. Here's what I'm going to say that I think is very important. So if you're a newer trader meaning like anything under a year, even 2 years, like anything, or like if you've been trading for longer than a year and you're not profitable yet, I think you listen to what I say in this next sentence. I think it's immensely critical. Okay. Once your take profit 1 is hit, I would like move your stop loss to entry, make it a risk-free trade, guarantee yourself that win, and move on to the next trade. That way you then again, whatever happens with this trade, right? You can give it, it's a little bit more comfortable giving it leeway because it's already a profitable trade. It doesn't matter what happens from there. So typically a good practice, if you're starting out and you're not very comfortable managing your trade like live, well, obviously like you're in the trade and you're watching the charts, right? If you don't have the level of comfort, or you find yourself, closing your trades because you're scared that like price is going to go against you, right? And you're like, you locked in take profit 1, and then you're like, you're like panicking, not sure if it's going to hit the rest of your take profits, and you just market sell. One thing that you can do that again will give you a little bit more comfort, in my opinion, it's helped me. This is something like I still use today, and I just think it's good practice, to be honest. But again, once your take profit 1 is hit, moving your stop loss to entry, making a risk-free trade, and walking away, and like just letting the trade play out to your original trade setup. Either it's going to hit or it's not. But at the end of the day, it's already a profitable trade, so you're good there, right? Like there's no risk of losing money, or tiny risk of losing any money, assuming like their exchange, again, something out of your control happens, right? Because there's always risks. So now if I'm positioned against the high time frame trend, so again, using the same example that I have, so bullish, because this is the example that we're going with, right? So if I'm shorting on lower time frames and the overall, like the higher time frame trend is bullish, I manage these positions a lot differently than I do if I'm on the same size of trend. So if I'm positioning myself against the higher time frame trend, I'm very quick to take profit. So once my take profit one is hit, I absolutely move my stop loss to entry. That's it. It's a done deal. Like, and I do that because, and again, everybody's gonna do what you're gonna do what you're gonna do ultimately, like what you feel comfortable with and what you think is good for your risk management, right? This is only something like I'm only sharing my experience, basically like how I manage my trade. But what I think, there's two things that bother me as a trader. Number one, and probably the worst thing that you could do, is watch a position that's deep in profit and then watch it go completely against you and hit your invalidation. Now that happens. Now again, it depends on what your trade setup is, of course. So like if that's how that trade is meant to be traded, then that's good. You know, maybe that's part of the deal, right? And you accept that. And over time, again, if you take enough of those trades and you have an edge taking that trade, then you'll be hopefully be profitable anyway. But what I think is terrible is that, again, having a trade and it kind of like, I would say that these types of trades are more like people having unreasonable targets, right? So again, like if you think that the targets are reasonable and that's how you can manage a trade, then it is what it is. But like for people that have really unreasonable targets, I think that's kind of one of those instances where like you're not really not having like a concrete trade setup, and you're not sure, like you're just buying because you want to buy, and then again, like you might have price go your way and see like nice profits, and then all of a sudden it evaporates, goes against you and stops you out, or liquidates you, right? So like never want to have that happen as much as possible. And then the second thing is it's, you know, if price comes up to your take profit one, and then so you lock in some profit there, and then if you don't move your invalidation up to your entry, price goes against you and then hits your invalidation, that like, I don't, depending on your trade setup, you could lose money, you could break even, or you could lose a little bit of money, right? Or maybe, or make a little bit. It all depends on your trade setup. The point being though, is that if you're going against the trend, you hit take profit one, move your stop loss to entry, and you're locked in that profit. So all the profit that you made selling or again closing your trade at take profit one, right? Whatever percentage that was, move your stop loss, you move your invalidation up to your entry, you're guaranteeing yourself that win. And I think when you're trading against a trend, that's not an unwise thing to do, from my experience. So I manage these, obviously, like I said, I manage these a little bit differently. I'm quicker to take profit. I almost guaranteed move my stop loss to entry once take profit one is hit. Now take profit one, you'll notice the difference here is that it's typically 40 to 50% of the position. So whereas if like, and you see like that's how I don't give it as much leeway, I guess you could say. So my take profit one is a lot. It's usually a more significant amount of the overall trade that I'm in, because I want to lock in more profit, because I'm taking a counter trend trade. So if the trade goes my way, right, and it hits take profit one, I want to ensure myself that I lock in a nice amount of profit. That way, again, if it goes against me and hits my entry, like basically taking me back out of the trade, if I move my invalidation up, then I still locked in, you know, 40 to 50% of that trade. And I'm fine with that. Versus if I had done kind of a standard thing where, again, let's say I maybe did 15% and then I hit take profit one and all of a sudden I get my invalidation, like I didn't make that much money, right? Or like I didn't manage that as well as I probably could have. So for me, this is how I manage my position on, like, basically, well, I'm always aware of the higher time frame trend. I think it's very important. And then whatever trades that I'm taking, I'm always keeping it in the back of my mind. Like this is essentially the guideline that I have for myself in order to manage my positions, right? So like, how am I going to set my take profit one? Now I let technical analysis, I want to be very clear about this. I let technical analysis determine where those levels are, where the take profits are. But I let trend help me figure out how much of my position that I'm taking off for those take profits. So I hope that's very clear. So if there's a clear trend, this is how I do it. If I'm in a range, I don't even know if I want to get into this in this video because that could be a whole different thing. But let's just say in a range that it's more because you're really dealing, like you're not expecting price to deviate outside of that range, right? So it depends on what range you're trading as well. But for the most part, the percentages are going to be higher because there's less levels, right? If you're expecting price to remain range bound, typically it's going to follow something more along like where the bottom here, where I'm taking, probably 40-50% off at take profit 1, and then take profit 2, cutting the rest, something like that. And then, if I expect price to remain range bound, get a good setup, maybe I'll reverse my position and I'll fully close out if I'm short, and then I'll flip long or something like that. Again, it's hard to say in a video without like looking at a chart, but again, trend, very important. And it's understanding as well. If you're trendless, you have to understand that too, right? So if you're range bound, you have to understand like how you're going to it's understanding the overall environment that you're in. That's going to help you, again, better manage your trades. So this video is a little on the short side. I'm going to keep it, and it's intended to that way, because I think like when we get into these more detailed focus type discussions and tutorials, I think it's really important to keep it short that way. And if it's something that you might have to watch a few times to like really soak in and understand everything that I said. But I do, again, the trend video specifically will be coming soon, that way, like, because I think it's very important to make sure that you feel like incredibly comfortable identifying trend. I think it's very important. One series that's already out, so it doesn't matter who's watching this, the series is already out. I highly encourage you to watch. Now, you don't have to, obviously, but I encourage you to watch the Ichimoku module, because just for trend, I think it will help you identify the trend very quickly. You're going to spend a lot less time. Especially if you're trading, let's just say you're trading 50 different pairs or something, like, depending on how many, if you're trading Bitcoin, Ethereum, then like a handful of alts, for example, you can go through the chart and literally in 2 seconds figure out, you'll know immediately what the trend is. And like, even if you've been away, let's say that you took a month off of trading or something, you're coming back, it's like you don't have to sit there and like pour over all the details. You're going to see very definitively right away what the trend is. So I really think that that's a good, that's a great module to go through. But anyway, here's my social media. I did change my Twitter handle, by the way. It's like my old one is still, it's just it just hooked up to another account now. But I did change my Twitter handle, so I am posting quite a bit on there now. But again, this is where you can follow me. If you like my content, if you could leave a like on the video, I'd greatly appreciate it, and a comment that like helps push my channel out to many more people. I would be greatly appreciative of that. And again, hopefully that this was helpful. We're going to get into a lot more detailed stuff as this module progresses, of course, but I thought that this was a really important video to get out today. Again, just kind of like based on some of the discussions that I've seen in Discord, and kind of the overall state of the market. I think it's really important to as far as not only risk management goes, but again, like trade, like it's part of risk management, but part of again, like managing your positions. I think it's really important to have a clear picture of how you're going to do that for yourself, because it's going to hopefully help protect your account a little bit better. So anyway, I'm going to cut it there. Trade safe out there. We'll see you on the next one.